I'm very bullish on gold and silver for early 2023. I think the main thing there is to watch the long trousers. Keep an eye on the DXY. As long as that trend remains downward, I think that's very bullish. We need to watch for changes that might derail that thesis. But we should see that. If we start seeing signs that the Fed won't ease up, or signs that the ECB will, right, and that might change the DXY's trajectory, then we need to beware of that. But for now, I'm very bullish on gold and silver in the first half of 2023. I'm also very bullish on, just go ahead and branch out. I'm the other yellow metal. Sometimes I'm not sure which one deserves that moniker. Gold was up a fraction of a percent by the time trading closed on December 30th, 2022, whereas uranium ended up the year about 12% up, and it remains in a very nice 5-year upward trend. From 18 to $48 is a pretty nice rally, better than gold. Like I don't know what's going to happen with the DXY. I think it will continue this way for the next couple of quarters, but it could reverse. People are disappointed that gold didn't perform better in an environment of high inflation. But remember, we had the dollar rallying quite strongly through most of the year. We had real interest rates going from extremely negative territory to much less negative territory. Both of those in the modern world we live in would normally have been huge headwinds for gold. So I actually think gold traveling sideways in that circumstance was a big beat. And you're not wrong. Money printing does matter. Inflation does matter. I think that base effects will bring measured CPI and PCE down, but I think they will be stickier at higher levels than the mainstream imagines. And I do think that will be supportive, whatever the wrong trousers do. I do think that will be supportive for gold and silver going forward. So that would be the other thing is, watch the inflation rate, not just the DXY. Let's see if it comes down as fast as the mainstream thinks it will. And if not, I think that'll be another rude awakening that could really change the markets in our favor. So let me first say that I don't know what the central banks are doing, and I don't think anybody outside of them does. Well, the problem is you get these guys on Twitter or LinkedIn or whatever saying, oh, the central banks are doing this for this reason, and this will happen. They might be right, but your thesis, your theory is not a fact. It's a theory. Your opinion, is not a fact. It's an opinion. And if you persuade people to invest based on this opinion and you're wrong, you can hurt a lot of people. So with the central bank thing, it is interesting that through the IMF reporting that we all see through the World Gold Council, central banks have been accumulating a lot of gold. Net, they've been buying for many years. There used to be a central bank agreement not to sell more than 500 tons a year, a ridiculous number. But now you don't even need the agreement because they're all now on net, they're buying. But this lends itself to theories. This is exactly why it's so powerful. Why is it happening? And if somebody presents you with a credible case, one of the theories was that the central banks were suppressing the price of gold, keeping the price of gold down so they could accumulate it before remonetizing, before putting their currencies back on a gold standard and having accumulated a lot of gold on the cheap. And as an example of what I'm talking about, like this Basel III thing was years in the making. And then it rolled out and it was only partially implemented. And then, oh no, well, it's not going to happen until it's fully implemented. And then, it gets fully implemented, still nothing happens, right? So please, dear audience, when you are peddled a theory that you want to believe because it fits with your worldview, that's really the time you need to be more cautious on the basis of gold going through the roof when Basel III went into implementation. Then they got hurt. And I would hate to see more good-hearted people, right-thinking people get hurt on that kind of basis. Supply does matter. Prices that are determined by supply and demand in general. It matters more for regular commodities that are consumed regularly. It matters much less for something like gold, which is, it does have industrial uses, and I would include jewelry and dentistry and all that as a quasi-industrial use. Well, the dentistry is industrial, but the jewelry you could think of as a kind of industry. It's it's separate from the psychology of investing. But as many people have pointed out, the amount of purified gold on the surface of the earth, most of the gold ever mined, I don't remember what the numbers are. Nobody really knows, but the numbers I've seen are calculations like 95 to 97% of the gold ever mined is still on the surface of the earth in purified form in vaults or rings or whatever. It's there, it's accessible. So the laws of supply and demand really don't work so well with gold. The amount of gold on existing is so much more than mine supply that you could stop mining and it really doesn't impact the price of gold much at all. If it's there, right? That doesn't make the supply go away. And silver is somewhere in between. It is industrial and monetary. Mm-hmm. Prices tend to create supply very easily there. Whereas price movement, say in copper or nickel, that's not going to create supply. But there's if the price of copper goes up, it's going to be years before the big mines come online to start producing that. It's not like grandma has copperware instead of silverware. LBMA has copper, some, but most people don't store tons of copper in their bank vaults, and it's too bulky to fit in your bank deposit box. Mm-hmm. So it doesn't have that kind of supply that can come onto the market the way monetary metal supply can. So I do think that is something to be cautious about. Beware of, exciting theories about why supply squeeze, has to move the price. If it comes with a deadline, right? If it tells you when the supply squeeze is going to create a price movement, be very cautious. I'm no fan of the efficient market hypothesis. I think any speculator, especially in the commodities space, knows how. That used to be true, but maybe now not so much. After the advent of the cryptocurrencies and and the meme stocks, who can believe in an efficient market when something like a cartoon on a Reddit channel can send a completely bankrupt company's shares up hundreds of percent. That's just crazy. Mm-hmm. So yeah, I'm not a fan of the efficient market hypothesis. This is a good thing. It creates, when markets overreact, they can get overbought and oversold. And when there's a difference between price and value, you can go long or short. The odds are that price will come back to value. But let's take this from theory, macro theory, to practical reality right now. A lot of people are thinking, oh, well, this recession of 2023 is the most well-signaled recession ever. Everybody knows it's coming, therefore it's priced in. Mm-hmm. Well, that may or may not be true in stocks. I think it isn't.